Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. And where better than to Brexit? Well, overnight, an extraordinary event in the land of those importunate Brexiteers and Ramonas. Agreement in the British Parliament, a consensus in the Commons. A vote that delivered enough support for the Prime Minister to take one agreed position back to Brussels. Theresa May will now go back with the message that for a deal to happen, the Irish backstop, as drafted, cannot be part of the withdrawal agreement. Now, this backstop, demanded by the EU to avoid any hard customs border between Northern Ireland and the rest of Ireland, is a step too far for the Brits. It puts the Good Friday Peace Agreement at risk. It threatens to reawaken the Troubles. Remarkably, there is overwhelming support for a second position, and that is that a no deal is not what most parliamentarians want. Hooray!
It is now clear that there is a route that can secure a substantial and sustainable majority in this House for leaving the EU with a deal.
It's one teeny problem, Mrs May. The Brits may agree to the deal, but the other party, the collective 27 EU members, most certainly do not. Non. Yet, the EU will not budge, and the backstop and the withdrawal deal cannot be negotiated. Mr Macron saying the Irish backstop is the best accord possible. It is not renegotiatable. No one wants a no-deal scenario, but we should all prepare for it. So what can we expect next? Well, it seems likely now that the EU will hold out. Mrs May will come back again from Brussels for another meaningful vote in the British Parliament, which will be voted down again. And then perhaps she'll go back to Brussels yet again and demand, amend my deal or it's no deal. Then, at the 11th hour, with March the 29th stampeding towards us, Brussels just might blink. It is rather strange that it's been the divisiveness of Britain, intra-party bloodletting, ministerial resignations, daily protests, all dragging the chain at such outrage over Mrs May's very weak hand that she's played with Brussels over the last 2 years or more, really from the get-go, which has delivered this small patch of common ground that might now reset negotiations. Call it the art of the deal. Well, all the latest analysis on what this means for Brexit coming up with Australia-British Chamber CEO David McCredie, who's just back from London. Now, also coming up on the show, Huawei gone, TPG pulling out of 5G. Oh, happy day for Telstra shareholders, and CEO Andy Penn in particular, whose T22 business strategy is banking on 5G to underpin the future. CEO Andy Penn himself coming up on what it all means for Telstra and the future of work. Apple faces iPhone glitches and China trade hitches as earnings disappoint. We'll talk about the big tech troubles and the latest storm with Huawei with the Australian's top tech expert Chris Griffiths. And December quarter CPI comes in and we're still below the RBA inflation band. How does that play into this year's bank deliberations? We'll talk to Capital Economics' Ben Yudi from Singapore. Well, as I mentioned, today was a great day for the head of Telstra to be on his feet. A whopping 6.5% jump in the share price yesterday, courtesy of TPG's strategic withdrawal from 5G. And also caught by Huawei technology it was, and its merger with Vodafone, which is being held up by the regulator. But back to Andy Penn, the CEO of Telstra, who was talking on one of his favourite subjects at a CEDA lunch today, the future of work and how Telstra can help. Now, according to CEDA, 5 million jobs in Australia, or 40% of the workforce today, have a moderate to high chance of disappearing within the next decade as a result of things like machine learning, AI, cloud computing, all that. But, to Andy Penn again, crucial to the future of work is more close to home. The brand spanking new 5G network, the most critical component of the Telstra T22 strategy. I spoke with Andy Penn a little while ago. Andy Penn, you have done quite a big speech today on the future of work, but as much as anything, it's a bit of a plug for 5G, isn't it?
Oh, well, look, you know, the speech is very much centred on the future of the workplace and the future of work, which I think is a really important topic right now as we come to the end of the the 2010s, and it's a very important topic for Telstra. But of course, one of the reasons it's an important topic is technology is progressing and continuing to change, and 5G is going to be critical in the context of that, and which is going to create more change in the workplace. And so I think, you know, technology and 5G in particular definitely is linked to the topic.
I'll come to future of work in just a moment, but clearly the big news for Telstra shareholders yesterday was your whopping kick-up in the share price as a result of TPG pulling out of the 5G market. More broadly, Andy, what sort of impact do you think this will have on 5G in Australia, TPG no longer being part of it?
Oh, look, well, we're very well advanced in our 5G plans. We've got 200 sites already up and running, and as I announced a couple of weeks ago, we've got a number of arrangements in place with some of the leading device manufacturers in the world to bring their devices, 5G devices, to Australia first. I know our competitors are looking at 5G as well, and they're all very serious and very well capitalised competitors. I think sometimes it's easy to look at Telstra as being the big company in Australia, but of course our competitors are very, very big in some respects. Vodafone, globally they're bigger than Telstra, and Singtel's very big. They've got very, very deep pockets, so I'm going to take them very seriously, and they will help promote and build the whole 5G ecosystems for all Australians.
But do you think TPG being out of it now will make a difference to the delivery of 5G and the timing of 5G?
Look, I think that everybody's timetable for 5G is going to be pretty well developed. I know ours is. We've been working on it for at least a couple of years, so I don't see why yesterday's news would change that. 5G will be available to Australians very, very soon.
The assumption that the market is making at the moment is that Rod Sims will agree to a merger now between TPG and Vodafone. I'm wondering if you would also consider a scenario where Rod Sims says, well, look, yeah, maybe, but only on the basis that, that perhaps Vodafone TPG then open up their networks to other users, like the sort of virtual network, in other words, other users like Boost and Virgin for resellers on the network. And the implications of that, of course, would be he'd want the same from Telstra. What impact would that have on the business and the market?
Well, look, there's a very sophisticated and well-developed what we call an MVNO market that exists already in Australia today. It's called Mobile Virtual Network Operators. So they're people that basically offer mobile plans but don't have their own network, and there's lots of them in Australia. We have several on our network, and our competitors do as well. And the ACCC has looked at this whole regulatory environment for the mobile network environment and has concluded the existing system and the arrangements work very, very well because they promote the right level of investment from companies like Telstra and our competitors on the one hand, but they create the incentive for us to invest as well. If you just open up the networks and everybody's basically can use everybody else's network, then there's no basis for differentiation, and then therefore there's no basis for investment, and the people that miss out are the customers.
So, what do you think would happen if the ACCC did force, as a condition of a merger like that, some sort of opening up of the network in the way that you're describing?
Well, look, we're not a party to any of the discussions with the ACCC. I guess that's a matter between the people that are speaking to the ACCC at the moment. But look, you know, really what I was here to talk to you today about is the future of work, because the really exciting thing about 5G is 5G is arriving at exactly the same time as a number of other technologies are maturing. So things like cloud computing and software-defined networking, and these are going to be transformational in the workplace. Yeah.
Well, let's go to that, because you lament in your speech that the top 10 Aussie companies are really old world companies, and, you know, there's stark contrast to the US and big tech. Now, Telstra you'd almost put in that sort of old world basket, in that it has the legacy with it. How can you compete and be agile with those sorts of big tech companies who have customers in Australia all through the nation?
Well, the whole basis of my speech is that this new technology-driven world is coming at us. In fact, it's here. We're about to enter in, I think, to another wave of radical technological change with 5G and with the technologies I've mentioned, and therefore the only way that we will be successful if companies, including Telstra, completely change our approach to our customers and change the way in which we work, and that affects the workplace, and that's really the whole premise of the speech. So I'm supremely confident that we will change and we will be successful, but it won't happen by accident.
Crucial to that, and again you talk a lot in your speech about your own workforce, what's happening to that workforce. Now you talk about, of course, the NBN losing, meaning a loss for Telstra of perhaps a third to a half of its earnings, roles changing, 8,000 jobs going, new capabilities and a new type of engineer you talk about.
Yeah, well, if you think about telecommunication networks, historically, and they've been around a very long time, we put up the first networks in the 1860s and 1870s. So they started in a world where they were very physical assets. And of course, over time, they've become digitised. And what that means is that our traditional skills of network and electrical engineering remain critically important, but we have to complement them with new skills in software engineering, in data analytics, in cyber security, in artificial intelligence, because apart from anything else, that's how you run a network today. Networks today are software engineered technologies with physical assets. They're not just physical assets anymore. And so that's why we need to build those new skills. And 5G will just see another step change in that.
Right. One of the things you talked about as well is the fact that the skills that you're looking for in Australia, there are some, but not enough. You're looking now at opening the big innovation and capability centre in Bangalore in India. Does this open yourself, given the job losses that are having to happen at Telstra, to criticism that you're actually just picking up offshore workers and laying off people here?
Well, look, firstly, let me deal with the job numbers at Telstra. I mean, I think one of the things that you have to take into account is the impact of the NBN, because essentially the creation of the NBN is basically taking some work that Telstra used to do and the NBN is doing it. And it's interesting, if you look today, we've communicated that we will reduce our headcount by about 8,000. But interestingly, already today, NBN employs nearly 7,000 people. Yeah. Directly, and then indirectly another 24,000 contractors. So it's not necessarily that the jobs have gone from Australia, that the jobs have actually, they've just shifted from Telstra to the NBN. So that's the first point to make. The second point to make is that we recruit hundreds and thousands of people in Australia, including software engineers and people with skills in new areas. But the simple point is that the pipeline is just not big enough. So last year Australia had about 1,200 software engineers coming out of our universities. India had 44,000. We need hundreds of software engineers. And so we need to work with the government, work with the tertiary institutions, which is part of our overall strategy, to see what we can all collectively do to increase that pipeline for the betterment of the nation overall.
Andy Penn, something else you talk about is partnerships with Australian universities, which is interesting. I'm wondering about other partnerships as well, 5G partnerships, to help you build your 5G network. Now, certainly in Europe, we've got companies like T-Mobile, Deutsche Telekom, approaching car manufacturers, for example, or you think of the driverless car and other manufacturers that might use 5G to tip in and help build and be a part of the 5G project. Is that likely here? Will you be looking at partnerships with either maybe electricity builders or businesses, for example, if not car manufacturers?
Well, that's already happening to some degree, because if you think about the telecommunication network of the future has become really the platform for pretty much every technology innovation that is happening in every industry. And so whether it be in mining, in agriculture, in cars, as you mentioned, in logistics, virtually every part of the system is now being connected. So we all have a interest in creating the infrastructure and the resources to create that connectivity. And so we are working with some of our biggest customers and our biggest companies in Australia jointly on projects to to really build out that infrastructure to enable them to get the benefit of 5G and the other technologies that they need to automate their businesses.
So that means joint investment projects, so others tipping in money towards 5G?
Yes, it does mean joint investment projects.
Yes.
We have a range of different arrangements. Often we will put up all of the capital and build out the infrastructure. Sometimes customers want specific solutions where they want to actually ultimately own the infrastructure, particularly where that infrastructure is not owned, is not shared. So, for example, in mining in remote areas, you may put in a network for a customer who does not need to share it with anybody else, because essentially the only thing that is there is the mine, and so they will often want to own that infrastructure. Finally,
Andy Penn, just one last one. Given the share price rise is all about TPG, as I say, yesterday, and indeed Huawei having left this market as well, can I ask you about your plans in China now? You've, with Michael Abid in your enterprise division, very much pushing opportunity in China. Telstra's got the largest submarine cable across the Asia-Pacific. It's the only foreign carrier with a licence to operate in and out of China. Are you concerned at all about the risk of a tit-for-tat action by the Chinese government, which might damage Telstra's opportunity in China?
No, look, I'm not aware of any reaction that's going to impact our business across the Asia-Pacific region. We, as you say, we have the largest submarine cable network. We carry about 1/3 of all traffic within the Asia-Pacific region. We've got as you said, we've got effectively a cloud licence in China. That business is growing very successfully, and we'll continue to invest.
Andy Penn, thank you so much for your time and talking to us about the future of work and 5G.
Thanks very much, Ticky.
After the break, headline inflation rising 0.5% in December. We'll get some analysis from Ben Udy, Capital Economics, next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, still no fire burning under inflation locally, with mixed messages coming from the fourth quarter print, beating expectations last quarter, but core inflation still ending another year below the RBA's target band. The outcome cementing views interest rates will remain at record lows for the foreseeable future.
I don't think there's a whole lot new in this information. It's telling us that inflation's still low, absolutely. It's telling us that inflation is still above the trough that we reached a couple of years ago. As you say, it's climbing very, very slowly, but the RBA seems to be extraordinarily patient in terms of getting inflation back to target. No, I think that they deem their perspective on this is a much bigger picture perspective. Their perspective is actually inflation isn't that far from their 2 to 3% band, and as long as it's heading in the right direction, they're reasonably comfortable.
And the Aussie dollar has risen slightly as headline CPI rose 0.5% in December, surpassing forecasts for a 0.4% rise. Annual CPI inflation also beating estimates, coming in at 1.8%. Core inflation has now undershot the central bank's long-term target band of 2 to 3% for 12 straight quarters, the longest stretch since the series began.
Basically confirms inflation is still stubbornly low, struggling to get back up into the band. I mean, it may be rising, but it's been a very glacial rise. And, you know, going forward with the economy potentially slowing this year, you know, I think the challenge to get it back into that 2% band is increasingly being stretched.
The biggest increase in the quarter came from tobacco, food and recreation, while clothing, footwear and health services and transport all fell. However, concerns over a downturn in home values are still weighing on any optimism.
We're not too perturbed really by the backdrop of deflating house prices. I suppose there is a little bit of a risk in terms of the consumer going forward, because we saw household consumption slow in the third quarter, and we don't yet know what actually happened in terms of retail spend over December. But broadly speaking, I think it's still the labour market. If you come back to that and the forward-looking indicators, they look reasonably good, and if house prices can deflate against that backdrop, I think there's a risk to the outlook as far as the consumer goes, but it's our base case that household spending won't be too bad this year.
And for more on that result, I'm pleased to welcome Ben Udy, Australia and New Zealand economist at Capital Economics, who joins me now live from Singapore. Ben, nice to see you there. Now, you may have listened to some of our local market commentary there. Are you in line with that? Is that how you see inflation broadly?
Well, we're a little bit more concerned. We think the decline in annual inflation today is probably the first of a few. In fact, we expect annual inflation in the first quarter of 2019 to decline to 1.3%, which would be a bigger fall. And mostly that is on the back of weaker petrol prices. So the RBA shouldn't be too concerned about that. But I think the persistent missing of the underlying inflation to their target is more of a concern, and we see that getting worse before it gets better.
Right, because that's interesting, because there's a lot of talk about, you know, having turned the corner and inflation, albeit slowly, is moving up towards the band. You disagree with that and think we could be moving away from the band again, is that right?
Yeah, I think probably prices would continue to slowly firm up if the economy held its momentum and growth continued to tick along above potential. But given the how heavy the downturn in housing is becoming, we're concerned that growth may actually slow a bit below potential, and that would increase the spare capacity in the economy, and would probably mean that underlying inflation would probably be more likely to go down than it would be to go up.
OK, so you're putting quite a lot of weight on this jolly old housing market fall. What about the labour market in particular?
That's true. Yeah, the labour market is definitely the bright spot in the economy at the moment. Admittedly, employment growth is slowing down a bit. It's fallen considerably over the last year, and we think it'll probably continue to fall a bit. It will stay reasonably solid. Unemployment is probably going to stay fairly low, but we see it probably ticking up this year.
And what about, interestingly, we had a report yesterday from NAB on business confidence, and that has been crashing down. It's not looking terribly good. How do you see the way a business is looking at the outlook this year?
Yeah, I think exactly. That goes to our point that employment growth will continue to slow because businesses are getting less confident about the economy. Not to mention the employment in the construction sector is almost certainly going to slow as housing demand continues to fall. And so I think that the fall in business confidence reflects both the housing market but also the softening in global conditions at the moment. So those are two things to definitely watch.
So Ben, throwing in, as you mentioned, global conditions, China in particular as well, and we don't know what's going to happen with the big trade spat between China and the US. Where does this all send your thinking on what the Reserve Bank will do this year?
Yeah, so we think that the combination of inflation falling, headline inflation falling, underlying inflation staying below target, growth probably falling below potential, and softening global conditions, we think the RBA will actually be forced to cut this year. So probably towards the end of the year when things become a little bit more clear.
Well, that is interesting, and you think maybe one cut will be enough? I mean, it is a very big change in terms of what the governor has been saying through last year, that if there was going to be a change, it's likely to be on the upside, not the downside. So you think the market has changed considerably?
Yeah, I think the RBA will probably at their upcoming meeting still hold the view that that the next move is more likely to be up, but we don't think that that's what will eventually pan out. If we're right and the housing market does weigh on growth as much as we think it will, I think that they'll be forced to reconsider that view and eventually maybe cut this year, and we also have another cut priced in for early 2020.
Right, well, that's a very interesting perspective. Ben Udy, thank you so much for joining us there from Singapore. Now, are quotas necessary to achieve gender equity on boards? Well, a fresh report from the Australian Institute of Company Directors shows women accounted for nearly 30% of all ASX 200 board positions as of the end of last year, marking an all-time high. Given the results, Angus Armour, CEO of the AICD, argues quotas are unnecessary and equality can be achieved without regulatory oversight.
I think the results from December demonstrate that corporate Australia has embraced the idea of diversity, particularly gender diversity, and I think it, again, pulls back from the need for any sort of legislative intervention.
The AICD has also named and shamed the 4 remaining all-male company boards: AMP, ARB, Emeco and TPG Telecom. Overall, I think the AICD is to be congratulated on its campaign. The number I'm still waiting for is the percentage of women directors on top company boards, because it's not the same at all as the percentage of directors who are women. That's because some of our female directors are on a lot more than one board, of course, but it's all progress, isn't it? So after the break, the best behind Apple. We'll get more on the company's next chapter after the break with the Australian's Griffith.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, Apple, the big tech company, reporting today, flagging weak iPhone demand in China amid ongoing trade tensions, with the tech giant now saying it expects sales for the second quarter to come in between 55 to 59 billion US dollars, mostly below analysts' average forecast of 58.83 billion. But on a bright note, revenue in the December quarter came in slightly above analysts' expectations at 84.3 billion US dollars. All eyes are on China, though, where the company's quarterly net sales came in at 13 billion, down from almost 18 billion for the same period last year. CEO Tim Cook acknowledging his disappointment, missing the company's guidance, adding that he sees hope of easing trade tensions between the US and China, as well as an expanding services business. At the close, Apple shares taking a hit, down over 1%. Remember, it's a big company. However, the market is changing its tune after the results were released, after the bell rising as much as 3.7% in extended trade. So a lot of big volume there, presumably. Well, for more on this and a deep dive into tech, I'm pleased to welcome back Chris Griffith, technology reporter at The Australian. Chris, hello. It's lovely to see you at the beginning of 2019. It's been a very busy time for you, isn't it?
It's been enormous. I mean, apart from going to the Consumer Electronics Show and covering that,
yes.
We've seen the encryption issue start up again, which is going to be a big issue this year. And then we've seen this amazing fallout from the Huawei issue that you and I have been talking about last year as just a tech issue, being like centre stage on the world now.
Well, let's come back to that. Let me just hit you with Apple first.
Yeah.
So its results are sort of a bit of a mixed picture there. We did hear reports this week about it having a bit of a struggle with its iPhone and FaceTime, people being actually accessed before even they think FaceTime starts. I mean,
before calls.
Yeah, but is this a sign that they're just not getting things right before they put out the product? They're under pressure to get things out first?
Well, it is a little bit of a sign. I mean, it's obviously a glitch in their own software, and for them not to pick this up earlier, it's a worrying sign.
They had battery problems before, didn't they?
Yeah, that Apple prides itself on, putting out perfect products in perfect condition and perfect privacy, which in this case would be breached. So it is a bit of a worrying sign, and I guess they're going through a stage of trying to work out where to next with this drop of sales revenue. We've seen it.
And you can really see how the trade war is hitting Apple, can't you? With the China trade war.
Well, particularly in China. That, yes. Yeah, that's we're going to see an enormous fallout all over the place.
Chris, how are their devices, Apple devices, particularly the iPhone, set against some of its competitors at the moment? Well,
there's a few problems that Apple's facing with the iPhone. In markets like Australia, the fact that our dollar's languishing, just above 70 cents means that it's really expensive here. Probably Americans may not understand that quite so much because it's not quite so expensive in the US. So
there's already the issue of it being quite highly priced, some of these brand new products, and then it's even more.
So it blows out over $2,000 here in some of the high models. And then you've got, actually, quite interestingly, in the Kantar research statistics we published this afternoon, you've got, ironically, Huawei, and then you've got some of the other China phones as well, doing particularly well in the world. Now, while Huawei...
including Australia.
Well, yes. While it faces, of course, all this issue with 5G, when it comes to the separate handset market, its P20 Pro and the Mate 20 have been seen very favourably in the market, plus its mid-range phones as well. So that is actually helping boost up the global Android percentage, if you like, at the expense of Apple iOS.
And this is a value for money thing.
Yes. We're talking here value for money. So we need to. So Apple has to really think about. I think it has to think about pricing, not just because it's getting more expensive, but because a lot of other markets are finding with the changes of currency values that it is really expensive.
Any other brands doing very well? I mean, you've
Samsung. Samsung S9. What was interesting, those counter statistics in Australia, was that Samsung's Galaxy S9 was the leading handset sales in the fourth quarter of last year, which is actually well beyond when the S9 came out. Like, its successor is due out, like, I think around February 20. We're going to hear about that. Yeah. But not long after the new Apple iPhones came to market. So really, it shows. I think Cantor is saying that people are really conscious of price, and I know that with something like the S9 you can shop around and get discounts, and so it's done very well. Briefly,
coming back to Huawei,
yes,
such a knock-on, both coming out of here and then with the big tensions with China and now with TPG as well.
Well, absolutely. I mean, this is going to go on for a year. There's no way that these charges, I think there's about 23 or 4 counts, are going to be waived with the magic wand and $1 billion fine, and for them being sent off the same way as ZTE. So the trial of Meng Wanzhou is probably going to go on all this year, if that's the case, and all the other people that they're indicting. So that's going to be real world tensions. Now, when it comes to TPG actually bailing out of providing a mobile network, citing that they can't use Huawei equipment, so it's going to be more expensive, it's a little bit more complicated. That could be part of it, but there's the belief, we can't prove it, that TPG sees their chances of merging with Vodafone better if they haven't got a viable network that the ACCC might want to actually preserve.
Yeah. Look, it's a fascinating play. Thank you so much, Chris, for bringing us up to date. Chris Griffith there. Time now for a deep dive into markets, and Citi's equities team is forecasting a tough reporting season ahead. Citi sees price declines for financials and commodities, slowing in the housing market and weak business conditions as all likely to impact upcoming company results. Sees challenges ahead for banks, telcos, consumer discretionary stocks, hints at some opportunities in the insurance, engineering and grocery retailing sectors. Your Money's chief business reporter Leo Shanahan spoke with Citi's head of equity investment strategy, Tony Brennan.
Reporting season could be tough after last year's weaknesses. How tough are you expecting this to be?
Not terrible, not seriously tough, but still I think the issue is that the latter months of last year showed a fair bit of weakness in business conditions, internationally of course, but also it seems here as well. I think the company analysts in the financial markets have been trying to factor that into their forecasts for the December half earnings, but they probably haven't really captured it all together. So I think when the numbers are published, they will probably be a bit weaker. And also the companies will guide about the rest of the year to June, and they'll probably be coloured by the experience of the last couple of months, so they'll probably tend to be a bit cautious. So that's why we think it will tend to be a bit tough.
We did have that period of volatility in the US, which spread to Australia to some degree. How much is that likely to affect companies here in reporting season?
Well, I mean, the direct impact of the volatility in capital markets is in the financial stocks, not so much the banks, but the other financial stocks like fund managers, the stock exchange, those sort of companies, insurers, and it'll affect their earnings to some extent. I think the other issue is that the world economy was probably a bit slower, particularly China, and a few sectors export goods and services into Chinese residents. So the food and beverage sector, which exports quite a bit into China these days, probably feel that a bit. Tourism's probably slowed down a little bit to Australia. But the other issue is I think the Australian economy probably slowed a bit as well late last year, particularly the housing market. So that could come through in different areas as well.
Yeah, and on the housing market, we've obviously seen downturns last year. How far are you expecting those to continue into the next year, and what areas of the economy will that impact?
Well, I mean, it'll affect residential sales. I guess that's the obvious thing. I mean, we did see some weakness towards the end of last year. Whether that carries on as intensely this year remains to be seen. But it's possible as well that some of that volatility globally impacted people's decisions here, just to put a bit of caution into people at the end of last year. So it may end up settling down a bit this year, but obviously the market's still slowing down from the strong growth of the prior 5 so years. Where it'll affect companies, I guess, is, as you know, we have residential developers in the real estate sector. There's also the advertising, real estate advertising, a couple of companies there in the media sector. And then I suppose the impact of house prices coming down on people's assessment of their wealth and the impact of that on their spending, you know, retailers.
What about the Reserve Bank's view of this? Do you still think come next Tuesday their opinion will be that the next move is more likely to be up?
Well, I mean, they'll be looking at what's happened over the Christmas break in terms of the information flow, which was what was going on late last year and what's possibly going on into the new year. They've said that their expectation is that the next move in interest rates is more likely to be up than not, but that assumes that their expectations for the economy are met, and if their economy isn't as strong as they were thinking, then they could review that. So it's possible we'll know on Tuesday after their board meeting, and then they have another update on the outlook that they do each quarter that'll come out next Friday, so we'll know.
Are you of the view that it's more likely this year that we'll see a cut?
I think it's possible they'll change their they'll tell us that their expectations are changing. That's possible, yeah.
Now, of course, we're awaiting the final report from Commissioner Hayne on the Banking and Financial Services Royal Commission. How bad could it get for banks this year? We obviously saw large declines last year. Will this continue into this year?
Well, I mean, their growth has slowed down. There's no question right there. You know, mortgage lending has slowed down. That's the main thing that's affected their growth. I mean, you have to keep in mind that for some years now they have been lending more cautiously. They've been pushed to do that by APRA since 2015, in fact, so it's been 4 years of that. So if the Royal Commission could, you know, sort of recommend, if you like, that they continue that process, but they're fairly advanced in that now in terms of having tighter lending standards, more responsible lending. So our feeling is that that's already fairly well progressed. Equally, where their lending has been questionable, they've been remediating customers now for the past financial year. They spent a lot on remediating. Yeah. They're expected to do so again. So again, they've done a lot in that regard. So we don't know what the Royal Commission's recommendations will be in totality, but the banks have already addressed issues for some time. So that's our feeling. So the outlook for them is not strong, but equally we've got a fairly balanced expectation.
Yeah. Now, where do you think things could be looking up? There's a lot of talk the mining sector doing quite well on the back of lower Australian dollar and some other factors, even food retailers again. Yeah.
Well, I mean, just at home here in our economy, we still think, although the housing market's slowing down, there's some other areas of strength that are probably going to keep overall growth reasonable this year still. One of them is the infrastructure spending that state governments and the federal government are doing. So that should actually affect the engineering sector in the share market, and also potentially the building materials companies that are selling into that, you know, the concrete, the other building materials that are used in that. So that's an area of strength. And also there's a fair bit of commercial building going on that's not infrastructure. So, for example,
there's a lot of cranes.
Yeah, office development in the major cities is significant at the moment because vacancy rates are reasonably modest because of the growth of white-collar jobs. And that, again, those two sectors, construction in general, and also the actual high-rise apartment construction is still holding up fairly well. And there's a fair bit of a pipeline of work to do there. Another area of the market where conditions are a bit better than they were a few years ago is the insurance sector, where you're seeing, you know, personal insurance and commercial insurance rates are going up at a reasonable rate, and the actual claims increases haven't been too onerous. I mean, we've had some one-off events in the past few months, but the more kind of ongoing claims haven't been too severe. Another area of the market that seems more stable is the supermarket area. So the companies there we think will have sound results. So it's more mixed, I would say, than, you know, dire.
Now we're in an election year, a federal election year. Are you expecting much government spending to boost the economy as a result of that? And what have some policies, the Labor Party's franking credits policies, come under a lot of scrutiny lately? Are you expecting that to affect markets here?
Well, there's a lot of uncertainty. I mean, we don't know who will win the election to start with, but the government's already indicated, but certainly there is some speculation in the media last week, that the government will provide some cash payments to the community in the April budget out of this financial year's budget. And the amounts involved are not insignificant for the economy, but my sense is that was more about the election rather than because the economy's specifically an issue at the moment. Then there will be the election in May. How that turns out, we don't know. But regardless, I think the Parliament, you know, the balance of power in the Senate will be a challenge for either party, I think. And so any proposed legislation, whether it be about franking credits or not, has to get through the Parliament. And governments of recent tenures in recent times have had to compromise on policy to get through Parliament. So we'll just have to wait and see.
Tony Brennan, thanks so much for joining us.
Thanks, Leo.
After the break, big Brexit news. Theresa May, the British Prime Minister, is on her way to Brussels again, looking at another deal. Get the latest with CEO of the Australian British Chamber of Commerce next.
Now, back to Ticky.
Welcome back. Let's return to Brexit now. Big development. British MPs have signalled their broad support for a Brexit withdrawal deal if changes are made to the Irish backstop. Now, it follows a crucial vote on 7 key amendments in Parliament after Theresa May's agreement was rejected a fortnight ago. Of those, 5 were voted down in the House of Commons, but the government-backed proposal by Tory MP Sir Graham Brady for alternative arrangements on the backstop won by 16 votes. I should add that the pound fell sharply yesterday in Britain after Parliament voted down a proposal that could have prevented the rather riskier no-deal Brexit. David McCredie, CEO of the Australian British Chamber of Commerce, joined me earlier. Dave McCredie, thanks for coming in. Now, you are fresh off the plane from London. I think you got in yesterday. There has been some movement, though. How do you see how these amendments have played out?
Well, it's been an interesting ride, hasn't it? Having come back to the Parliament again with now the option for them to amend the withdrawal agreement. A number of amendments were put forward. The Speaker then chose a number to take forward. And realistically, it only came down to the last 2 amendments that got approved. Yeah,
the most important of which is that Theresa May has found some consensus.
Well, indeed, both of them really prove that. I mean, the second to last amendment, which was approved, said that MPs in the House wanted to see a deal. That was, and they would prefer a deal than a hard Brexit.
Or a no deal.
Or a no deal.
Now, it doesn't legally rule out a no deal, does it?
No, it doesn't, but it shows that there's an intent there that the Parliament wants to do a deal, and that really leads into what the EU have been asking for over the last couple of weeks since the resounding defeat a couple of weeks ago, which is, well, tell us what you want. And they're clearly saying, we want a deal. And then the last of the amendments was the one put forward by Sir Graham Brady, widely supported within the Tory ranks by both Remainers and Exiters, and got over the line with a good majority. Yes. Which said, basically, we'll accept the deal as long as you do something, there's alternative arrangements made about the Northern Irish border issue.
Now, of course, that issue, that whole Northern Ireland backstop, has been weaponised, some would say, by Europe. what we're talking about here is a request by these parliamentarians to basically remove the backstop. Not warm, fuzzy words, but something either to put a fixed limit on the time or get rid of it altogether, but something presumably legally binding, a change to the withdrawal agreement.
Yeah, that's exactly right, because obviously they already have the nice fuzzy words about it not being something that either party particularly want to enter into in the political agreement that goes alongside the withdrawal agreement, which is all part of this process.
Yeah.
However, it's very much a very key part of the Brexiteers' claims is that they want to have a hard end to that, and that we know that that the UK wouldn't wind up in a vassal state territory, as Boris Johnson loves to remind us.
Well, as Boris Johnson said overnight, you know, it does mean, if Europe accepts this, it does mean that over 100 pages in the withdrawal agreement has to be basically removed. That is a big change. Now, Emmanuel Macron in France has already said non to any change to the backstop. So what do we think the reception will be when Theresa May goes over to Europe?
Well, I mean, clearly the EU 27 leaders haven't had a chance to get together and decide whether or not they feel this is workable or not. It's interesting, though, to reflect on what Michel Barnier said last week, which was...
So he's the chief negotiator, French negotiator, but for the whole of Europe.
On behalf of the EU 27.
Yeah.
And he said last week that even if there were a hard Brexit or a no-deal Brexit, that there wouldn't be, certainly the EU would not plan to impose a hard border on the island of Ireland.
So this goes to my point about the weaponisation of this entire issue. If that is the case, then what have the Europeans been doing?
Given the Irish issues, I probably wouldn't use the word weaponisation, but certainly it has been used as a significant piece of leverage between the two parties, particularly by the Europeans. And I think that what we're headed towards is a resolution which will allow no hard border and potentially the option of putting in a timeline which will make sure that that future agreement, which is all to play for, and the political agreement is just the start of, what will the future free trading arrangements and so forth look like between the UK and the EU. That's all to play for, and that's where this hard finish to that border issue could enable the UK really to get back in the driver's seat in terms of the negotiations and be able to say, right, we need to do this deal by then, otherwise we've got this problem of a hard exit and we need to do something about the border, so let's get it done.
Isn't it true that it's one of the real ironies that this division across party in Britain has actually potentially allowed the UK now to have more negotiating leverage that Mrs May lost, really, when she went over to do her original deal?
Yeah, well, I think it's interesting because we've got to the sticky point of the negotiation, and as I think we've said many times in our conversations over the last couple of years, it's only when you get down to the nitty-gritty that you'll find out where the EU really are, and I think the inclination is on both parties, both the UK and the EU side, to see a deal done. And if this is the only way to get past it, I think the EU will have to come to the table.
So there'll be two scenarios. There'll be either they do say yes and agree and Theresa May comes back heroic, or they'll say no again. And then what happens? We're racing towards a no deal.
Well, potentially, yes. But there are still options on the table, and despite the best efforts of some parliamentarians last night to try and force an extension of Article 50 at the moment, or after a trigger date that there were a number of dates put forward in amendments last night for that to be triggered, that there'd be an automatic extension of Article 50. None of that's got up.
Yes.
Doesn't mean that it couldn't get up in the future.
Yes.
So we still have that option in the bank as well.
And crucially, the idea of Parliament grabbing control from government as executive, not just for the Brexit deal, but indeed for all sort of business going forward, that was quite a scary suggestion. What's happened to that?
Well, I think the Speaker's played a little bit loose, it might be said, with how parliamentary rules and traditions have been upheld in recent times. he said he wanted to be the hero of the backbench, which is a lovely sentiment, apart from the fact that it's government who should run the business of the day. It's government who decides what items should be on the agenda and in which order they're prosecuted. And that's been the tradition for many hundreds of years.
And so that movement's gone away, has it?
I think so. I think it was also, I saw in the papers while I was in the UK that his peerage might be on the line if he doesn't pull himself back into shape.
David McCredie, thank you for that update.
Pleasure.
That's all for the show tonight. Tomorrow night, Elizabeth Gaines, Fortescue Metals CEO, will get her word on the company's December quarter results. Until then, thanks for your company.